Okay, hello everyone. Joel Landon here from Heritage IRA. I'm super excited to share some insightful information with you regarding a dear partner of ours. I've got Nick Stromwell here from Rise48. Nick, happy to have you here.
Yeah, so excited to connect and hopefully get to serve more of your clients.
Yeah, absolutely. And we've done a lot of business together. We've enjoyed working with your clients. You've got great clients, and our clients are always looking for opportunities to invest in a not just a good asset class, but also with a good company. And you guys are just salt of the earth. So if you wouldn't mind, just take it away, share a little bit about yourself, talk about Rise 48. I know you've got some slides as well, so just kind of fill us in if you don't mind.
Yeah, sweet. Yeah, I got started personally investing 17 years ago, bought my first duplex. My wife and I were working in ministry, and we just wanted a way to earn what we thought was passive income. So we bought the duplex. It was across the street from our house. It was great. It produced, some monthly cash flow. But I was the person that got the call every time something broke or the grass needed to be cut or whatever problem might have been. But we were really looking to be generous. That's what was really driving us. So we learned about commercial real estate syndications or investors pooling capital together to buy larger assets. And my wife and I, we started investing, and we came across a company called Rise 48. And I did my background research. And at the time, I was raising capital. So I had a lot of questions to ask. But as I looked more into the company and looked more even into the particular deal, I became an investor. And here I am a few years later working with the team at Rise 48. So I just wanted to share a little bit more about our story, talk about why we love multifamily, and then answer any questions you might have.
Awesome.
Okay, so here we go. So Rise 48, we are founded in 2018, based in Scottsdale, Arizona. We're a vertically integrated firm, meaning we have our own construction management and property management. We have over 325 W-2 employees. We've acquired now over 11,000 units across our target markets. We've never lost investor capital. We've had over 2.6 billion of transaction volume. We currently own 56 assets with over 12,500 units under management. And we have our target markets of Arizona, Texas, North Carolina, South Carolina, and Florida. A little bit about who we are. Here's our core values. So we're hungry for growth. We focus on team before me. We have a relentless attack mode. We're not afraid to fail, try new things, results over politics. We're a true meritocracy. We're really evaluated on the value we can bring to the team. Here's our three co-founders: Zach Haptonstall, our CEO; Bikram Sandhu, our CFO; and Robert Chefchek, our co-founder and broker. The capital team here is made up of myself, Nick Stromwell, Director of Capital Formation; Jeremy Dyer, VP of Capital Formation; and Jason Kish. So these are the people that would get to serve and help you guys. We have now over 67 total assets in our portfolio. You can see here a little bit of a breakdown of where those are. 42 assets in Phoenix, Arizona; 15 assets in the Dallas-Fort Worth area; 10 assets in the North Carolina area. And we're looking to continue to expand into some new markets. So what do? We buy 1990s and newer, 100 unit plus multifamily, where we can execute our business plan of rehabbing and renovating units, increasing the value by doing that. We have a hold period typically of 3 to 7 years. We've got our value add strategy where we're vertically integrated. We find the deals from brokers, typically off market. We've really established ourselves as one of the key players when someone really needs to close, meaning we can negotiate and get really favorable rates. We have full control over daily operations since we control the construction and also the property management. You really live and die by your property managers. So when they're Rise 48 staff, we can really control that. We have also full control over the supply chain and construction management. And we have a focus of renovating not only the unit interiors, but also the exteriors to increase value. So, put simply, if you can find ways to increase the income and decrease the expenses, through operational efficiencies, you can boost the net operating income and produce value. So that's what we do. And then we have a selling and refinance strategy with some tax efficiencies. So that's it's kind of simply what we do. Our supply chain, we get to manage the entire operation. We have months of supply, same paint color, same stainless steel appliances, all of the fixtures that we use. We buy all those in bulk to be able to save on costs. And we're really executing this a very similar business plan at each of our properties. So we know it well. It's not really super sexy, but we're supplying housing for workforce housing. People who need a dependable, high quality place to live. We're meeting that need in our major markets. So you can see here, Phoenix corporate office, Dallas Fort Worth, where we've expanded to second, and then the Greensboro, Charlotte, Raleigh area third. We're also looking to expand into Tennessee, Florida, Atlanta, and South Carolina. I think it's really important as an investor to be clearly communicated. What is the business plan? How's it going? And having a regular cadence, whether it's good news or challenging news, so that you, as the investor, know that your investment dollars are being stewarded well. So you can see here what that looks like. We do a monthly report, a market and deal summary, property KPIs, both the high level occupancy renovations, how many units have we been able to renovate, and then also really granular down to a property bank account level. We give you access to all the data that we have so that you, as an investor, are fully disclosed on how everything is going. We'll also give you a forward looking full year forecast of what we're anticipating. So at Rise 48, we focus not only on bringing great value to you as an investor to help you multiply your money, but we're also really building communities at each of our buildings. We've got community managers that hold monthly events, meals. We do activities together, think Easter egg hunts, things like that. Whatever we can do to produce a sense of community among the residents, that really ends up helping the overall financial picture. But we're focused on preserving your investor capital while still building communities, and we've been having a lot of fun really serving our residents. So I'd love to just talk a little bit about why we love multifamily as a asset class. A few reasons. One, it's tangible. It's a cash flowing real estate opportunity. And when you leverage your self-directed IRA, you can produce that monthly cash flow inside of your self-directed vehicle. So every dollar of distribution can really grow your profit of your account. This is a recession resistant demand. People always need housing in the United States right now. We're significantly short the amount of housing units needed just to meet the current demand. There's economies of scale when you have a 100+ unit apartment. If one tenant doesn't pay their rent, it's not going to grossly affect the overall business plan. So having that economy of scale is really important. And what makes us different from other operators? We're vertically integrated. We've got an awesome track record of never losing investor capital. We've got local boots on the ground in every major market. We're controlling the entire life cycle. We've got skin in the game. Our team and our founders put in LP capital right alongside of you as an investor in a pretty significant way. And then we've got a really successful track record on dispositions. We've been recognized as one of the best places to work in the Phoenix Business Journal, and we just got a great team culture. And we'd love to have an opportunity to get to know you. So if you are interested to learn more about investing in real estate, leveraging your self-directed account, just click this next button here, and we can book a call and have a chance to get to know each other. So here's the little QR code, and would love to get to know you. You can also email me, nick@rise48equity.com, and would love a chance to get to know you.
Awesome. I appreciate this, Nick. This is great insights into the Rise 48 team, the business model, the opportunity, your guys' track record. Love it all. I think about this type of an asset class fitting into a self-directed IRA. And ironically, I just got off of the phone before I met with you I mean, totally uncanny, but I was talking to Eric. He's somebody who's going to invest in Rise 48, and he reached out to us because he's new to a self-directed IRA. He mentioned in our conversation that it was several years ago that one of his close friends had invested in Rise 48. And this friend told Eric, hey, you've really got to look at this company that I found. There's a great opportunity to invest in real estate. This individual, Eric, he had different things on his mind, but he said that he spent a few weeks in Phoenix recently, and he saw Rise 48 come up a few times. This was separate than his friendship, right, with that one individual. He saw Rise 48 tied to some properties, and he also saw that you guys sponsored a basketball team. So all of that together kind of influenced him to say, you know what, I need to reach out to my friend. And his friend showed him his portfolio and the Rise 48 assets that had been performing over the years since they first had that conversation. And he knew right away, okay, this is certainly something that I need to, dive deeper into. So he did. He's excited. He's investing. He wants to use a self-directed IRA. So those listening today that might be curious about, can I do this with my IRA? 100%. If you've got the liquidity, this is a perfect chance for you to connect with Nick and maybe dive a little bit deeper into any current offerings that you guys might have available. Um, with that being said, you and I have done this for a little while, right? You've interacted with retail investors that either use personal money or retirement funds. Um, why do you think, Nick, that this type of an asset is ideal for a self-directed IRA?
Yeah, I like it for two main reasons. One, you can invest your self-directed in a lot of different asset classes, but this is a tried and true, proven high demand asset that if you're investing in areas where there's high job growth and people moving to those locations, you're setting yourself up for success, especially when you're betting on the jockey, so to speak, of Rise 48 because we've proven we can do this, and this is all we do. We love building communities with our residents and really helping shape those places. When I visit properties and I see the before renovated rooms and then the post renovated rooms, you can tell the quality that goes into how we renovate these buildings. And more than that, the staff really love on our residents. I see community managers high-fiving grandmas and low-fiving the kids. We put in playground equipment and we try to make the place a place where people really want to live. And when we do that, we're typically targeting roughly a 2x return for you as an investor. So we can get into the mechanics if you book a call with myself or someone on our team, but would love to share more about each individual opportunity that we have.
Fantastic. Well, Nick, with that being said, do you mind sharing one more time the best way for somebody to get in touch with you?
Yeah, we'll drop the QR code in the link below. Otherwise, just shoot me an email, nick@rise48equity.com.
Okay, awesome. Well, thank you so much, Nick, for joining me today. And thank you to those who've taken the time to listen to this message and reach out to Nick. And if you've got questions that you want to run by me directly beforehand, or if it's, related to your self-directed IRA, feel free to reach out to me as well. And appreciate you coming on board, Nick.
All right, thanks, Joel.
You bet.